Cardano has always taken a different path from the rest of the crypto market. While many blockchains prioritized rapid launches, aggressive growth, and early adoption, Cardano followed a research-first model built on academic peer review and formal verification. This approach shaped its development timeline, its culture, and its reputation. By January 2026, Cardano remains one of the most recognizable blockchain platforms, but it also remains one of the most debated. Welcome to the Crypto IQ. Today, we're examining Cardano's long-term strategy, its methodical development philosophy, real-world partnerships, decentralized finance growth, and whether its deliberate pace finally pays off in 2026, or whether it has been overtaken by faster-moving ecosystems. Cardano launched in 2017 with a core principle that distinguished it from competitors. Formal research would guide every major design decision. The project emphasized peer-reviewed papers, mathematical proofs, and layered development phases. This philosophy aimed to minimize technical debt and security vulnerabilities while building infrastructure capable of supporting national-scale systems. The network operates on proof of stake using the Ouroboros Consensus Protocol, one of the earliest academically reviewed alternatives to proof of work. By late 2025, Cardano consistently maintained high staking participation, with a large percentage of circulating ADA delegated across thousands of stake pools, contributing to decentralization at the validator level. Cardano's deliberate approach came with costs. Core features such as smart contracts, scaling improvements, and advanced governance tools arrived later than similar capabilities on other platforms. During those delays, rival ecosystems captured developers, liquidity, and users at a much faster pace. This gap shaped Cardano's public perception. Critics argued that the project prioritized theoretical completeness over real-world relevance. Supporters countered that security, formal guarantees, and long-term sustainability mattered more than short-term market share. By 2026, the impact of that trade-off is measurable rather than speculative. Smart contracts arrived on Cardano with the Alonzo upgrade, enabling decentralized applications through the Plutus programming environment. Unlike Solidity-based platforms, Cardano uses a functional programming model. This offered strong guarantees around determinism and correctness, but increased the learning curve for developers. Early adoption was slow, tooling was immature. Documentation lagged behind competing ecosystems. Over time, these constraints eased. By 2025, development frameworks improved, libraries expanded, and onboarding friction decreased. Still, Cardano's developer base remains smaller than that of dominant smart contract platforms. Decentralized finance on Cardano expanded steadily rather than explosively. Decentralized exchanges, lending protocols, and algorithmic stablecoin experiments gained traction across 2024 and 2025. Transaction fees remained low and predictable, contributing to a stable user experience. Cardano's extended UTXO model influenced application design. While this model provides strong guarantees around parallel execution and determinism, it required developers to rethink conventional DeFi architectures. Over time, teams adapted, and on-chain activity became more consistent, though overall liquidity remained modest compared with larger ecosystems. Cardano placed significant emphasis on real-world partnerships, particularly in emerging markets. Projects focused on digital identity, education credentials, land registries, and supply chain tracking were announced across Africa and parts of Asia. These initiatives aim to demonstrate blockchain utility beyond speculative trading. Progress was incremental. Pilot programs moved forward in stages. often requiring coordination with governments and institutions unfamiliar with blockchain systems. By January 2026, some partnerships showed tangible outcomes, while others remained in development or evaluation phases. Cardano's scaling roadmap focused on incremental optimization rather than radical redesign. Protocol upgrades improved transaction throughput, reduced latency, and enhanced efficiency. Layer 2 solutions and side chains were introduced to support specialized workloads without compromising base layer security. Network performance remained stable. Cardano avoided major outages and maintained predictable fees during periods of elevated activity. However, it did not achieve the raw transaction speeds of high-performance chains optimized for consumer applications and trading. Governance has always been central to Cardano's long-term vision. Through the Voltaire era, Cardano introduced on-chain governance tools that allowed ADA holders to participate in funding decisions and protocol direction. Treasury systems allocated funds to community-proposed projects based on stakeholder voting. By 2026, governance participation increased, though engagement varied across regions and stake sizes. The framework exists, but its effectiveness depends on voter education, incentive alignment, and perceived influence over outcomes. Institutional interest in Cardano remains measured. Asset managers tend to view ADA as a long-duration exposure tied to governance, decentralization, and academic rigor rather than near-term growth. Cardano is not typically framed as a high-velocity trading ecosystem or a primary settlement layer for institutional finance. This positioning attracts investors who value stability and process over rapid experimentation. At the same time, it limits Cardano's role in speculative cycles driven by consumer applications and aggressive incentive programs. By 2026, the competitive landscape is crowded. High-performance chains dominate consumer use cases. Modular architectures attract developers seeking flexibility. Ethereum's roll-up ecosystem continues expanding. In this environment, Cardano's differentiation relies on security, governance, and long-term resilience rather than speed. The opportunity cost of slow execution is clear. Cardano missed multiple waves of rapid adoption. Whether those missed cycles matter depends on whether future adoption favors durability over experimentation. By January 2026, Cardano is no longer evaluated on future promises, conceptual roadmaps, or theoretical capability. Its core infrastructure is live. Proof of stake operates at scale. Smart contracts are deployed, and governance systems are active. Developer tooling has matured compared with earlier phases, and the network has demonstrated long-term stability without major disruptions. At this stage, Cardano is judged primarily on measurable outcomes rather than intent. The central question is whether this foundation translates into accelerating adoption. Cardano's ecosystem has the technical components required for growth, but usage levels remain lower than those of faster-moving competitors. The coming period tests whether developers choose to build on Cardano for new applications and whether users consistently engage beyond experimental or low-frequency activity. Adoption, not architecture, becomes the determining metric. Cardano's strategy continues to favor longevity over immediacy. Its design prioritizes security, formal verification, and predictable system behavior, rather than rapid feature deployment. If real-world use cases scale and developer participation increases steadily, this approach could validate the decision to move cautiously. Government programs, enterprise systems, and long-duration applications often value reliability over speed, and Cardano's architecture is aligned with those requirements. If adoption remains limited, however, the risk is that Cardano's research-first model is viewed as overly cautious. Opportunity costs accumulate when ecosystems move slowly in a market defined by constant iteration. Competing platforms continue capturing users, liquidity and mind share at a faster pace, raising the threshold Cardano must clear to remain relevant. Cardano's future is not binary. It may never dominate transaction counts or speculative narratives. Instead, its success depends on whether methodical execution produces systems that endure beyond hype-driven cycles. In 2026, Cardano stands as a test case for whether academic rigor and long-term planning can compete in a market defined by speed and iteration. The outcome will determine whether slow and steady still wins in crypto. Subscribe to the Crypto IQ, as we will come back again with another interesting topic.